Welcome. In this video. Will XCN coin explode like a bomb? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When the chart is carefully examined, a highly notable and technically promising formation for investors stands out. This structure is the descending channel formation, which is frequently encountered in classical technical analysis and can often signal potential trend reversals. This formation indicates that the price has been moving downward within a channel by making lower highs and lower lows for a certain period. However, its main significance lies in the potential for an upward breakout at the end of this movement. In many cases, descending channels are not signs of a downtrend, but rather indicate a correction phase, and sharp upward moves are often observed following the breakout. Currently, the price is very close to the upper boundary of this descending channel. This region is technically considered an important resistance level, but there's a key detail to note. The price has approached this upper boundary multiple times, and has continued to press against it with reactions from increasingly higher levels. This tells us that although sellers are defending this level, buyers are gaining strength, and the resistance may be weakening. In technical analysis, the more a resistance level is tested, the higher the probability of a breakout becomes. This is exactly the kind of setup currently in place. Breaking the upper boundary of the channel would be a very significant development. Such breakouts have strong effects, not only technically, but also psychologically in the market. Especially if a price that's been under pressure for a long time breaks through resistance. Buyer confidence tends to increase, and the move may accelerate further due to FOMO, fear of missing out. Additionally, many investors view this type of channel breakout as a buy signal, which can lead to an increase in volume. This, in turn, enhances the sustainability of the upward move. It is also common in technical analysis for the price to move upward by at least the width of the channel following such a breakout. The distance between the channel's starting point and the last tested low is usually taken as a target level. This gives us a potential upside area and provides a supportive perspective for investors when planning their trades. So, the ability to not only identify the breakout, but also estimate a technical target level afterward is a major strategic advantage. Returning to the current chart structure, even though the price has been following a downward pattern within the descending channel, it is now clearly evident, especially in the last few candles, that upward pressure is increasing. This means that momentum is gradually shifting in favor of the buyers. It shows that the price isn't approaching the upper boundary by chance, but is doing so with deliberate buying interest. Such patterns are usually signs of an imminent breakout. If the wicks from previous tests are shortening and the closes are occurring at increasingly higher levels, this is a technical signal that the breakout is near. If volume is also increasing, this is another strong sign supporting a breakout from the channel. Rising volume indicates that there are more market participants and that the price movement has strong backing. Fake breakouts often occur with low volume and are not sustainable. However, volume-supported breakouts tend to be healthier and more sustainable. If an increase in volume is also being observed in the current chart, the probability of a breakout from this descending channel becomes quite high. But we can't make a decision based on trends alone. Let's take a look at other metrics as well. Stay tuned. The current price structure observed on the chart indicates the formation of a highly strong technical pattern. Especially based on our evaluation using the Elliott wave theory, we can see that the price has successfully completed the first and second wave movements and is now in a preparation phase for the third wave. This is considered a highly positive development in technical analysis, as the third wave is typically the strongest and most expansive price movement. According to the Elliott wave theory, prices move in a five-wave structure during bullish or bearish trends. Among these, the first, third, and fifth waves are impulsive, representing directional movement, while the second and fourth waves are corrective. Within this framework, the current structure shows that following an upward impulsive move in the first wave, the second wave has completed a retracement phase. In other words, the price is now in a quiet but accumulating wait before the third wave. Technically, such a structure could form the foundation of a new upward trend. The second wave is typically defined by a retracement movement aligned with Fibonacci retracement levels, most often occurring between 61.8% and 78.6%. The current chart structure aligns well with these technical expectations. The price has retraced within the 0,618 to 0,786 Fibonacci range during the second wave and appears to have formed a strong base for transitioning into the third wave by receiving upward reactions from these levels. This indicates that a healthy correction has technically concluded and the market is gathering strength for another upward move. Now attention turns to the third wave. This is the most exciting part of the Elliott wave theory, because the third wave is known to be the most powerful and high-volume bullish wave. This wave, which typically draws the most investor attention and participation, is often accompanied by positive news flow and strong buyer volume, pushing prices sharply higher. For this reason, the third wave is not only a technical target, but also regarded as a strong opportunity zone. The minimum target of this third wave is again determined based on Fibonacci extension levels. The most commonly used technical targets are the 1,618 and 2,272 extension levels. That is, an upward movement of 1,618 to 2,272 times the length of the first wave is expected. Based on the current data, these target levels appear reasonable and achievable. It can be said that the price is currently going through an accumulation phase before entering the third wave, and this phase is nearing its end. Such periods of waiting are often precursors to major breakouts, especially if strong reactions have come from significant support levels and the price is moving sideways with low volume. This structure can be interpreted as preparation for the third wave. During this period, investors tend to take safer positions, institutional buying increases, and market sentiment gradually shifts to a more positive tone. One important factor to consider at this stage is that the third wave is not just a technical movement, but also represents a psychological breakout. Investors who endured the selling pressure during the second wave correction gain confidence when the price turns upward again and become more eager to buy. This fuels the price rise not only technically, but also psychologically. Additionally, the third wave is often accompanied by positive news flow and growing market enthusiasm. Therefore, this movement also has the potential to be supported by fundamental data alongside the chart formation. Some technical analysts also believe that volume data reaches its highest levels during the third wave. This is because the wave represents a phase when both previously hesitant investors re-enter the market and new participants show increasing interest. The current chart also indicates that we are on the verge of such potential. If the price transitions into the third wave with a volume-supported upward move, reaching the target levels may only be a matter of time. When we examine the chart in detail, we notice the presence of a long-standing downward trend line on the RSI, or Relative Strength Index indicator. This trend line was formed from the RSI's peak regions where it consistently faced resistance at lower levels and created downward pressure. In other words, the RSI had been unable to break above this line for a long time, which in turn created pressure on the price. However, recent developments could signal a very positive shift in the technical outlook. The RSI has finally managed to break above this descending trend line with an upward move. This breakout is a highly important signal in technical terms because breaking such resistance lines is often a sign of trend changes or strong momentum building. The breaking of this descending trend line on the RSI is not just about surpassing a technical line. It also indicates that market momentum is gaining strength, buying pressure is increasing, and investor psychology is shifting to a more optimistic stance. The breaking of the downtrend, the RSI turning upward, and beginning to hold above the 50 level are generally considered early indicators that the price may also begin to move upward. This is because RSI not only highlights overbought or oversold zones, it also helps interpret the overall trend structure. Particularly when an RSI in a prolonged downtrend breaks that trend, it often means the line that previously acted as resistance could now be tested as support. But one notable detail is this. Although the RSI has broken the descending trend line, it has yet to confirm this breakout with a retest. In technical analysis, when trend lines are broken, the market often returns to this area to test it again. This is referred to as a retest. Therefore, the RSI should continue to be monitored. Yes, friends, I hope you like the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.